Welcome everyone to a new market update, or in this case, we're going to look at the long-term perspectives of cryptocurrencies. But before we're going to do that, I would like to ask you to subscribe to the channel beneath and follow me on Instagram. Yesterday, I've posted something with my predictions for this bull cycle, positive reaction, negative reactions, everything surrounding there. And I thought, why not give a slight video or insight in how I came up with those targets, as they are not too complex at all. As first of all, we are at the beginning of this bull cycle in general. We are just getting started in this cycle. Bitcoin had its first run breaking out of the accumulation, or before it broke the old all-time high at 2017. So I think we're getting into a new bull cycle in which we're going to see excessive numbers on the upside, just like we have seen in 2017. Who would have expected Bitcoin to run to 20k in 2016, or even Ethereum when it was still a few dollars in 2016 or 2015, and it ran towards $1,500 in 2017, 2018? Who would have expected that? Who would have expected to see Bitcoin drop towards 3k in 2019? Often markets are irrational and they make moves outside of what you can expect it to do. That is how beautiful a market is. That is also what you see or read in the Black Swan book, in which we are always determining levels where we can go to, but often the markets do anything outside of that box. So on the upside, it's also irrational. On the downside, it's also irrational. That's the beauty of those markets. Therefore, the next bull cycle will be excessive and will give targets that we currently are not expecting that to be hit. Therefore, you could see Bitcoin towards 300k or whatever, as that is higher than what you can imagine the markets to feel like. However, that is also the peak moment, so most likely those numbers are not going to be stabilized for a substantial period of time, just for a very short period, just like the peak high did in 2017. Similarly, just like Apple, Amazon and Tesla are currently being valued at numbers you would not have imagined to be likely a few years ago. So even Tesla is one of the biggest gainers. It outperformed Bitcoin in the previous year. It is currently one Tesla coming out of the factory is valued at $1 million. So that is an example of how irrational a market can be to the upside and downside. Just some background information before we continue. The value of Bitcoin is the first step you have to determine before you can go towards those altcoins. And there are several methods or models to define such a value of Bitcoin. The easiest one is the stock to flow model from Plan B. But the general consensus is that Bitcoin is the closest solution to sound money. And if you want to compare sound money assets to each other, then the only one you can do is gold. And gold is currently having a market capitalization of around 12 to 14 trillion. Also still heavily undervalued, but the value of gold is about 12 to 14 trillion. Bitcoin sits around 650 billion, which would mean that there is still lots to gain for Bitcoin to get to the level of gold. However, it is not likely that we're going to see such an excessive run towards those levels inside this current bull cycle, as that would mean that Bitcoin will hit $1 million or something. But it also goes in waves, and at some point the valuation of Bitcoin will be too high compared to the rest, or the chart is going to be in the parabolic movement or advancement, and then parties will start to take profit. However, if you're comparing the current cycle to the dot-com bubble, or you're comparing the 2017 movement towards the dot-com bubble, the dot-com bubble had a market cap of around 12 trillion until it collapsed. If you calculate the new run of this current cycle and we get into the same region of between 10 to 15 trillion in the next bull cycle, you could say that Bitcoin reaches a dominance of around 50% at that time, gives it a market cap of about 6 to 7 trillion, and then we get to the level of around 300 to 350k with the possibility of an excessive spike to the upside. Also, you should be aware that the dominance will most likely start to drop for Bitcoin, given the fact that there's just way more than Bitcoin alone. But at the moment that Bitcoin starts to run heavily, we've also seen that in December 2017, Bitcoin will most likely start running with a higher dominance chart as money will flow towards Bitcoin rather than altcoins. But the fact is that the height of the next bull cycle could be comparable towards the dot-com bubble in relation to the adoption or awareness. I've taken the 12 trillion check mark there. We could be higher, we could be lower, who knows? But I think that is a very easy to understand and general measure to take in this next cycle. So if we conclude that the cycle will take it towards about 12 trillion, 10 to 12 trillion, which is a 10x from here, you can easily calculate all those projects at 10 trillion or at the 10x. However, once we determine the value of Bitcoin at the peak high of the cycle, we should also know that other projects will likely outperform Bitcoin. The lower cap they are, the higher risk there is, the higher the return might be at some point in the cycle. So we know that Bitcoin will start to run excessively at one point, and then on another point, altcoins will start to outperform Bitcoin, which grants those massive returns that we know. Therefore, Ethereum has a more risk involved in the investments, through which a higher return can be generated as well. And let's be real, as I just said, the dominance of Bitcoin will only start to drop in the coming years, the more that DeFi and platforms will start to take itself towards adoption. Ethereum value, if you predict or if you calculate Bitcoin to go towards 300 to 350k, is the same 10x as the value of Ethereum could do from here, which means that a 10x from here would take Ethereum towards 13 to 15k, which is not unlikely in a conservative way. As we just said, that if Bitcoin starts to run, Ethereum could outperform Bitcoin significantly, but I've just taken the conservative way. However, as the dominance of Bitcoin will start to drop, I'm also assuming the dominance of Ethereum to drop heavily, as more platforms will start to integrate with Ethereum to start building that ecosystem through which interoperability will start to take over, and we get an ecosystem with multiple platforms communicating with each other. Therefore, we have Bitcoin currently as the main cryptocurrency, we have Ethereum as the main platform, but the further we go down the line, the less dominant those projects will become, as that's the beauty of decentralized ecosystems. In that regard, other platforms will slowly start to take more market cap or market percentage from Ethereum, through which platforms as Silica, Cardano, Elrond, Polkadot will be slowly pacing up. And if we take that standard 10x statement, we can do that with the current values of these projects, bringing Elrond to $600, Polkadot to $170, Silica to $1, Cardano to $350. Also, if you are expecting Bitcoin to run towards 200k in this market cycle, you can 7x all those numbers and then still take the multiplier for higher risk, higher reward. Therefore, I just said Silica to $1 and Cardano to $350, but in the tweet they are higher. Why is that? Well, we have to be realizing that most of the altcoins still didn't have any run yet, given that Bitcoin has been seeing its massive run. So those still have to wake up and get to the levels where Bitcoin is at this point. And you should know that the lower you go in market capitalizations, the higher the multiplier could be at their peak highs. So therefore the easiest way is to 10x all those values. But for Silica and Cardano you could do 20 to 40x, given the lower market capitalization that those have. Even if you go outside of the top 100, you might have a 100, 200, 300x, whatever there is, through the entire bull cycle. But you should know, once again, the higher the risk involved in those projects, when they are valued lower, the higher the return could be. What about DIA and Chainlink? Well, the dominance of Chainlink is also very heavy in the market segment that it consists of, which is the Oracle segment. It has the largest market percentage there. The second one is Bond Protocol. However, Chainlink is one of those first runners, and therefore more projects will start to run in this segment as oracles are needed for the ecosystem. Valuation of DIA is about 50 million, while Chainlink is at 9 billion. If the whole market goes 10x from here, it's not unreasonable to expect DIA to outperform the markets given the fundamentals and the low market capitalization it has, plus its first bull cycle. So if it could have the current value of Chainlink or 10% of the current value of Chainlink, the project will go 14x from here, regardless whether the market goes 10x or not. Then examples of strong projects. We know that Aave did 1000x since the low, and the 2070 peak high is not even close. We also know that Chainlink is far above the 2017 peak high. New projects start to accelerate heavily after the market listing, and the adoption still has to start. So you should be open for excessive runs on the markets. You should be expecting those to occur given the strong fundamentals that crypto consists of. And therefore we're going to look at the charts in which we can see that Aave is that chart that is ridiculous. So what we see here is the 2017 peak high, which is $46. Right now it's about 9x. Just giving you insights in how fast those markets can accelerate. Will Aave be an entry right now? Of course not. You should not be entering it. But I'm just showing that once a project is fundamentally strong and the bull market is going to last for a few years, those 2017 numbers will just look as small as the dot-com bubble looks for. Let's see where we can get it. This is the dot-com bubble. That is how small the current cycle looks for the equity markets as well, just as same as how small 2017 will look for the markets at the end of this year or in the coming years. So therefore, if you want to accumulate your altcoins, you should be aware that that period is most likely going to come again in February when hopefully everything corrects. But the time to accumulate is right now on the most of them. Some of them have been running excessively. Some of them have been doing really well. Therefore, you don't have an accumulation period yet. But you should be aware that markets are always excessive to the high and irrational on the upside and irrational on the downside. This is the dot-com or the crypto bubble in 2017, peak high. This is Chainlink currently, through which we can see that even these first runs were breaking 2017 highs. And that's what we're going to see in the altcoin summer this year when everything starts to run heavily. So the conclusion is that I'm assuming the market to go 10x from here, including awareness and adoption. And if everything 10x's, you can just use a multiplier for the smaller project there is. Still, you have to do fundamental research, but that is the way that I've determined those numbers. Don't forget to subscribe. I'll be back tomorrow with a new market update, and I'll be back tomorrow with the live stream. Have a wonderful Sunday.